All right. Hello, everyone. Tim Davis coming to you guys with a long-awaited market review. So I wanted to start this thing as overnight, just before markets open on Monday, and the time is now about 1:15 a.m. Eastern Standard Time on May the 1st. And I'm going to start off by taking a look at the dollar. But before I do that, I just want to make sure that you guys are aware that this week is Fed Speak Week. So Fed rate decision week, which is not, which is important, but I think what their commentary is going to be at 2 p.m. Eastern Standard Time on Wednesday. That's when the Fed minutes, so Fed released their minutes, so the Fed has their commentary, which is around 2 p.m. when the Fed rates decision is going to be made, and then at 2:30 is when the press conference, and that's what I'm going to be paying very close attention to. Is to the Fed press conference to see what their thought process is. There are a lot of analysts that believe the Fed sometime this year will start to cut rates, but then there's a lot of folks think they're not going to cut rates. They think they're going to pause after this meeting. There's a lot of folks believe that they're going to pause and see what happens throughout the next year or so. And the markets have been signaling I think the Fed's going to pause and start to cut, but that's going to be not a bad, it's not gonna be a great thing if the markets don't get what they want. So we have to see what happens as the Fed meetings are released, as the Fed rate decision is released at 2 p.m. on this coming Wednesday. It's Standard Time, and then the Fed meeting at 2:30 p.m. directly after that. So starting with that, this dollar, let's take a look at where the dollar has been, because again, if there's any ramp up in the dollar, folks, you're going to see markets start to struggle. And if you look at what the dollar has did since the beginning of 2023, it came right back down to an area of support, and it's been hovering, it's been staggering around an area of support. I guess it's looking for some catalyst. And could that catalyst be the Fed meeting this week? That is very, very possible, folks, for the dollar to decide what it wants to do, but it looks like it has formed a double bottom this year. So we've been hovering around this 101 level for a very long time, for several months. We've been hovering around this at least over the past month and a half or two. We've been hovering around this level after we made a complete U-turn from the beginning of this year and back down to level of support. So will this week's Fed speak press conference be the catalyst to either push us into deep oversold territory on the VIX? I mean, I'm sorry, on the dollar, or do we get a pop back above this 20 per moving average and start another leg higher? We have to wait and see. But this week is going to be a very, very integral week. There's a lot of earnings that's going to be coming out again this week, and it's also the Fed press conference, which is gone. I tell you, it's going to be. You will probably see volatility really be all over the place this week. And we have to see how the week ends. It's going to be a very, very interesting week, to say the least. So that's where we are. This is a weekly chart. I want to show you guys where we are. We are at a level of support on the dollar and extremely close to a possible decision where the dollar's going to finally get a rebound, or if it's going to break down below this level of support. Look at the CCI. CCI has been in an almost a setup mode, because it's been hovering around these oversold levels on the Williams percentage and on a full stochastics. And it looks like the CCI is getting close to what looks like it wants to be a possible setup for a possible buy signal, as these two lines, Candy D, is getting closer and closer together. It's like the green one is ready to go upward. Who's that to see? I see what happens. But May could be a very, very interesting month, very extremely volatile month. So pay close attention to what happens starting this week with all the earnings and with the Fed press conference that's coming up on Wednesday. So again, dollar's at a very, very integral point where it could start to see a bounce. We got to see. But it's at an integral point where it could start to see the bounce. CCI is getting very, very close to a buy signal on a dollar, and the dollar's right back at a level of support. Now let's switch straight to the VIX futures. I'm looking at the VIX futures, then I'm looking at the regular VIX. I want to point something out. The VIX took another leg lower, which a lot of folks probably say, okay, we're back in the bull market, but don't start counting your eggs in the basket just yet. I still think the VIX is at an extreme low. And if you see this weekly chart of this VIX, got a pop, and then we got a drop, and the VIX is still right at an extreme low, but it's still right around support. So the VIX futures between that 17 to $21 level, that's just hovering around our area of support. We got to an extreme low at one point, then we ricochet right back up to the 20-period moving average, then look, we came right back down. Okay, that's what the VIX futures looks like on a weekly chart. So we're back at the level of support, and we're just hovering around here, and waiting to see what the VIX decides to do. And if you look at all the oscillators in the full stochastics, Williams percentage, and CCI are all still hovering around the oversold territories on the weekly chart. I want to real quick hop to a daily chart because I want to point something out here. All right, I want to point this out on this daily chart. Now, 9 times out of 10, when you see a gap up in the VIX, whether it be the futures product or cash market product, regular VIX, you see these gaps. 9 times out of 10, gaps fill. So what happened last week? About a week or so ago, we got a gap up in that VIX. When we got down to an extreme low, dropped down below 17 in the VIX futures, and boom, we got a gap up, back up to that 20-period moving average. And then we started to trend right back down in an attempt to fill this gap. This gap was just about full. So this is the gap area. Okay, and 9 times out of 10, normally when you see a gap fill, 9 times out of 10 on the VIX seems to want to reverse back to the upside. So we had to see what happens on this week. This gap is just about full on the VIX futures, and we had to see if it starts to trend back higher this week to fill. I mean, after filling this gap area. So we got to see if it decides to trend back higher. That's something to pay close attention to. Now, let's switch back to a weekly chart. And stretch this out. So that's what we look like on the VIX futures. And let's look at the regular volatility index, VIX, and voila, look at that. What do you know? It got and it's still weekly chart, still trending down. Got back to the bottom of this range, and look, we broke below that range, folks. Broke below that range. Now we're at lows that we have not seen since the beginning of 2022, which is right around it below 16 bucks. Very impressive. But let me point out some things. We are at extreme lows, folks. We are at extreme lows within a bear market, and a lot of information is about to drop this week with a lot more earnings and the Fed minutes, or should I say the Fed speak on Wednesday, Fed press conference. Look at the CCI, folks. I want to point this out. Look at this CCI. Okay, this big divergence we had between the green line and the yellow line, and then look what this looks like it's trying to do. Big dip below oversold territory, and look at this hinge up right here, like it's ready to hinge up. That's bullish for the VIX, negative for our market. So the deeper this VIX drops, and if this CCI is defying odds and showing a divergence and starting to trend higher on the VIX versus lower, which price action is showing us, the CCI continues to trend higher. It's not going to fare well for the overall markets. But if with price action on the VIX dropping, you don't want to on a weekly chart. something that the bulls don't want to see is a hinge up in the CCI with the VIX still dropping, because that's a negative divergence. Well, it's positive divergence for a bullish VIX. So that's something to pay close attention on this week. We got extreme levels on the low side. So do we start to curl back up? The CCI is saying that we do. So we have to see which indicators are holding firm, standing true. I love CCI because CCI normally gives you advance warning. Just like we did back here when we got to the deep oversold territory on the CCI back between July and September of 2022. You see the CCI dropped in the oversold territory, and we started to curl right back up. You see what happened when we started to curl back up. Then we got this crossover, which is what I think we could see anytime soon. And when we got that crossover, when the CCI started to curl back up, see, we marched higher again in a significant way. So does that happen again? We have to wait and see. But every time we see the CCI start to curl back up, the green line start to curl back up, normally we see some type of reactionary move to the upside. We're curling up there. We curled up here back in July. Here's another area back in April of 2022. We started to hit this bottom red line, curl back up, and look what happened then. So we get to some of these extreme levels we see right here back in October 2021, hit that red line and we curl back up, and we see what happened then. Right back here in April of 2021, up down to that extreme level, started to curl back up, got across there, and we see what happened then. So is that what we're about to see now? That's a huge possibility. So it's something we got to wait and see as we go through the month of May. All right, now let's switch to take a look at the Dow Jones futures, that is. And here we are at the Dow Jones futures. Again, folks, we still stuck in this trading range. Okay, so here's this trading range I got highlighted here, and we are still hovering around the top of that trading range, believe it or not, and just can't find a way to break out of it. Now, if the Dow futures find a way to pop 35,000 and can't continue higher than that, could signal a new bull market. But we're just stuck in this trading range. We keep going from the bottom of the range to the top of the range, and then hovering around the top of the range and showing up, down moves, up, down, up, down, up, down, up, down at the top of the range. So still a bunch of nothing to hang your hats on just yet. Okay, so we're back at the top of the range, looking at the Dow futures. All right, then if we take a look at S&P futures, again, still range bound on this weekly chart. Let's get a little bit closer here. Wide range here from 3,800 to 4,200. That is the range, folks. We right back almost close to that 4,200, back at the top of this range, folks. And we've been hovering around the top of this range for a minute here, headed into a Fed speak, a Fed commentary. So we're still range bound, folks. Believe it or not, we're still stuck in this range. And we're back at the top of the range. Here is the NASDAQ futures. Again, back at the top of a range. And we've got like we said, nice bounce last year from October lows and back to the top of the range. And that's where we stand. We're back towards the top of this range, close to just below 14,000 on the NASDAQ futures. Right now we're hovering just around, we've been stuck within this tight range right here on the NASDAQ. Yeah, so we were stuck in that range right there in overbought territory on the weekly chart, around 3,000, let's see, about 3,340. 3,350, somewhere around it. We've been stuck around this upper part of this range for quite some time. That's the NASDAQ futures. And there was some mixed reviews last week, last week, folks, between Google, Amazon, and who else? Meta. Meta had a big bounce. I think Amazon had some troubles. Google may have had a little stumble. Let's take a look at that real quick while we're talking about it. So Amazon, it final last week had a little stumble last week, right at a level of a resistance. It had a little stumble last week on Amazon, as you can see this weekly candle here. Bounce and then started to reverse, and there's a huge sell volume right there on Amazon from last week. Meta just the opposite, if I'm mistaken. Meta got a nice little pop and is in extreme overbought territory right now. Meta got a little pop. And Google got took a little bit of a bounce, but look closely. It didn't get as high as this high back here. So still it's stuck in the range. So it's still not as high as these highs back here from last week. Still stuck in a range. So nothing really to that makes you think that we're off to the races in a new bull market, folks. It's still a lot of indecision. So I had to point that out. All right, so let's take a look at. So we did the Dow Jones, we did the S&P, did the NASDAQ. One more we'll take a look at is the Russell. We look at and then we'll look at the dollar again. We need to look at the dollar again. I want to show you guys the daily chart on the dollar as well. All right, here's the Russell. Russell, folks, has been the laggard of the bunch, and it's been stuck in a very tight range, and it's been hovering around the lower band of the range, folks. So that's interesting. You got to see once the Russell gets a huge bounce out of this range. Normally, in order for the market to really see an advancement in a new bull market, we need to see the Russell participate. So what the bulls want to see is a Russell that breaks out of this range to the upside. Small caps break out of this range to the upside, which would more than likely signal really strong move higher and a possible move out of this bear market. But as of right now, the Russell is still struggling, and it's stuck below its 20-period moving average on this weekly chart, and it's stuck in a tight range as well. So does the Fed commentary on this week, Fed press release on this week, end up being the catalyst for a breakout of these ranges? We have to wait and see, but that is a huge possibility, along with earnings that continue to report this week. Now, look at one more thing before we bounce out of here. Again, I want to look at so we've seen what the weekly dollar looks like. Again, we're looking very close, very close to a possible buy signal on the dollar weekly index by looking at the CCI like it wants to cross with a buy signal. So that won't be positive for the market. So keep that in mind. Now let me dive a little closer and look at the daily chart. Here's the daily chart of the dollar, folks. One thing I'll point out, it's been gearing up for a move, folks. Look how the dollar has been pretty much. See all these solid candles over here, and since we've been trading down to around to this $100 level, look at that. We got to as high as lowest 100 right there. And then the dollar started to move up a little bit, folks. Believe it or not, not dropping back below this level here, starting to move up a bit and getting very close to a move above its 20-period moving average on the daily chart. That is a positive signal for the dollar, not so good for the overall markets. And look at the full stochastics. While we've been basing here finding it's holding support. The CCI has been creating higher lows, higher highs, and higher lows. Look at this. CCI has been heading high. I mean, full stochastic has been heading higher after it came out of the oversold territory. But the wins percentage, it too has been heading higher. And look at the CCI, it too has been wanting to go higher. So could this be the week that we finally see a move up in the dollar? I mean, a significant move up. That is a huge possibility because it's not been creating low lows. This has been creating higher lows. Lowest we've got was around 100.78. Since then, we've been right back up to the 20-period moving average and been stuck right around the 20-period moving average. And price action is back at the 20-period moving average, waiting for a decision to go either higher or just fall out of the bed and go lower. I think we're going to go higher. That's my honest opinion. All right, so that's something to pay close attention to. Pay close attention to this DXY, this dollar, and see what happens. And pay close attention to the VIX futures and the regular VIX. All right, folks. That's all I have for you guys for right now. And again, Fed minutes. The Fed rate decision will be Wednesday, and then the press conference will be directly after that at 2:30 on Wednesday. Enjoy the rest of your morning and have a great trading week, folks.